Have you ever wondered what the technical definition of a breakout is? When you go through the trading space, many different gurus are going to have different definitions of what a breakout truly is. But how do you identify one on a daily chart with all of this confusion? Today, we're going to build out the most simplistic form of a multi-day breakout using Spikeet to try to capture some of the most recent and best examples. The most recent example depicted by the most basic form of a breakout is AGBA. We have a stock that goes on a big run, consolidates for a day, and then breaks out. Now, where have we seen this at other points in our trading? Well, let's look back to, I believe it was end of September, early October, when FEI also had a pure form of a multi-day breakout, where we go from a big run, a consolidation day, and then a breakout. Now, how would you build this out on Spikeet so you know what to expect and even have more examples to filter through? That's what we're going to discuss today. What we are aiming to do is put into literal words, how do you define this type of setup so that you can go back and backtest this setup and see if there are good results to when stocks set up in this specific way. Well, we're going to have to look at this chart and say, okay, how can I define this, right? And so I think by doing so, everyone's going to have a very good idea as to what specifically is a multi-day breakout, and then what wouldn't be a multi-day breakout, or what's not picture perfect. This is Spikeet, and we're going to go into get manual the old data the old-fashioned way. And we're going to call this 1 day pause breakout. 1 day of run, a consolidation day, and then a breakout through those levels. We're going to capture the ones from just recently. So first things first, we want our NASDAQ, we want our New York Stock Exchange stocks. Secondly, I'm going to put a market cap filter on this. Market cap is less than or equal to 500,000 or 500 million. I like to deal with small caps, so that's why I have a market cap filter. I just don't want to see everything that sets up in this way. So we'll add that right there. And then we get into building it in your own words. So the first thing is, what makes a multi-day breakout great? It's a combination of a good technical setup, a clean daily chart, and shorts involved.
Ever dreamed of trading like one of the Clovers? Well, it all starts with the right broker. Clover Trading and Centerpoint Securities have teamed up to supercharge your trading experience. By joining Unlock the Power of CP Edge exclusively with Centerpoint, we're talking top-tier trading tools worth over $6,000, all at your fingertips. Get ahead with real-time scanners, cutting-edge news, and a tailor-made trading journal. Experience trading like never before with superior short inventory, personalized support, and interest on your idle funds. Plus, you can get competitive pricing that fits your trading style. Ready to elevate your trading game? Click the Clover Trading link in the description below to get exclusive deals with Centerpoint Securities. Now let's get back to the content.
So the first thing we need is a stock that has gone on a run. We need to make sure that shorts are interested in this stock in the first place. So this is what we're going to do. We're going to do day 0 high. So day 1 unadjusted minus daily. We're going to do 4 days back from the big volume day, the first day that it even comes on anyone's radar. So 4 days back is -4. Let's call it the low. So the high minus the low divided by the daily -4 low is greater than or equal to 1. So this is just basically saying that in the past 4 days, this stock, the day that it gets of interest, is up 100% from its 4-day low. Add some unadjusteds here. Great. That's our first criteria. Okay, we have a stock that is in play, a stock that is interesting. Okay, it's got movement. We want to make sure that this stock has volume. We want to make sure that this isn't some, illiquid reverse split. We want to make sure that there's liquidity enough to get people involved. So again, we'll do day 0 volume times daily 0 close is greater than or equal to 25 million. So the dollar volume, right? The close times the volume will give you the dollar volume of the stock. We want that more than 25 million. So if a $1 stock traded 25 million shares and it closed at 1, that would meet our threshold. And that's a pretty low threshold. We're just looking for a good amount of trades going through, a good amount of players. So now again, our goal is to create this AGBA chart. So we have 1 day of run, a day of consolidation, and then a breakout. So there's a couple parameters we have to put on this in order to create this picture. We can agree that this is going to be day 0, right? And this stock is up 1, 2, 3, 4. The 4-day low is 44 cents. And then the high of this day is 165. So we're clearly in that 100% plus threshold. But what happens on day 2? Day 2 is a consolidation day. we want a situation where shorts are inverse a level. So we don't want this to be choppy. We want it to hold a specific level and stay underneath it, right? So again, day 0 is our big gap up day. So day 1 is the day that follows. And what we're gonna wanna write is our day 1 high is less than our day 0 high. What we're essentially saying is this stock never broke the previous day's high. We stayed underneath it. Great. But that is pretty much all on day 1. Now let's go into day 2, right? Day 0 is gap day, just to not confuse everyone. Day 1 is consolidation day. Day 2 is breakout of the previous consolidation highs. So on day 2, we're gonna want the high, the eventual high of day 2 to be greater than the high of day 0. That is instigating that we broke the highs. So add that in there. And then pretty much the last piece is I want this stock to break out. I want this stock to break through the highs, squeeze the shorts. So I want the day 2 open to be less than the day 0 high. That way we open up underneath and we come out of it and we break out. That's pretty much the multi-day breakout criteria that I look for. Obviously, still looking for clean charts, good share structure, good catalysts, other things that could help the vision come true. We'll get some very simple columns. I'm not really doing this for the columns right now, so I'm not gonna overthink it. Let's see if we pick up on the AGBA chart. Spikeet's doing its work, and assuming that we made 0 mistakes, we're gonna open up this data sheet, and we should see, you know what? I did make a mistake, so we're gonna go back, we're gonna edit it, we're gonna need to do, I had to think the columns a little bit further, we need symbols. And again, this is really good for backtesting, right? You wanna go back and know what kind of setups are possible, what to expect within circumstances. It's not gonna be perfect. There's gonna be some on here that, fit what we're looking for, but the daily charts aren't as clean or aren't as set up as well, and they would be pretty much not qualified. Let's open up the data, see if our work is correct. And there we have it. Right here, AGBA, just a couple days ago, the open is 127, the high is 166, the low is 72. So this day that it's depicting right here is going to be AGBA on day 0. So after 2 days, it breaks out and you're gonna have a successful result on AGBA. So what I would do next is probably go into day 3 and kind of figure out, do I expect gap ups? Do I expect gap downs? What percentage do I expect this type of setup to return? And you can see there's other examples, right? BOF came after that. So here's BOF, a stock that, had gapped up, had a day of consolidation in between and then broke out, but actually failed that breakout and closed rather weak. So this isn't like saying once you see this setup that you're automatically going to be able to profit from it. You still need to know, share structure, risk management, triggers, entries, times of days, all that good stuff, which can be back tested, which is why I'm showing you guys first, just how do you draw the picture? Let's go to the last one, ELYM. So ELYM, I'm imagining that it's this day is day 0. This is the consolidation day. This is the breakout. Breakout turned into another day of extension. So yeah, pretty cool stuff. You can do this all the way back. And this would also pick up on, if I had the dates going back to last year, this would also pick up on FEMI here, which is another situation where, day 0, consolidation day, breakout, continuation. So now you guys know my technical definition of a breakout. I literally spelled it out for you guys. And if you want to learn how to trade things like that, you know where to find us, clovertrading.io, where you have myself, Dom, and Kyle Williams trading this type of setup, first red days, first green days, and all the pretty much steps in the framework. So happy hunting, guys, and we'll see you for the next video.